What's up guys, it's Jeff here and welcome to FX Mindshift. Today's video we're going to be talking about the Euro USD. Okay, so we're going to do a little analysis on EU today. We're going to take a look at a few trades that happened, some setups that happened last week, and also just going to look at the pair in general and just show you guys what happened, from like a 2-week span of what happened with Euro USD and see if we can forecast what's going on next week. Okay, so here's the EU chart. This is over a 2-week period, right? So from the week previous, July 2nd, into the week that just ended, okay, the week of July 9th. So this is a 2-week span, and you can see what basically we had was last week's peak formation low, okay, or previous week peak formation low. This is what PFL stands for, which goes into our level 1 rise here. Okay, then it went into level 2 rise into a level 3 peak. Okay, and I want you to note real quick, this line here represents the week cutoff. Okay, so this is the previous week into the week that just ended, and you can see this is the they had a peak formation high that they created on Friday here to end the week, and then starting the next week rather. They extended the high and they created this peak formation high. Okay, so what do we know from the market maker cycle is that session beginning, week beginning, okay, there's usually a false move, right? So this was the false move week beginning. Okay, so what they did was they created this sentiment, this upward, bullish sentiment all week. Okay. And then into the next week, what they did was they created this peak formation high. And this is basically just to get the retail traders to believe that this trend is going to continue up. Okay, and if you had no idea what the market maker cycle was or the levels or anything, you would have no idea that you were in level 3 and you were expecting some kind of reversal at this point. Okay, you can see here the 3 times ADR is 212 pips from the bottom of this peak formation low to the top of this peak right here was about 200 and so pips, right? So it wasn't exactly 3 times ADR, but it was close enough, right? So you were expecting some kind of reversal anywhere in this range here, right? So, but to the retail herd, what they're looking at is they're looking at a massive uptrend that's continuing from the previous week, right? So all these traders probably had pending longs up here or trades to take long up here, or they even took buys at this point, right? Because they're seeing that the trend is continuing, okay? But what did they do is when once these breakout traders had their orders hit and these people were taking longs, the market makers just kind of took it away from them, right? They took it right back down, reversed it, and gave you the reversal and took a level 1 drop down to this point right here. So this is your level 1 drop, okay, and into a pullback up here. And if you guys were watching on the charts Tuesday, Wednesday, there was a speech, right, an ECB President Draghi speech, okay, that was leading up to this big spike here. Okay, so this is what this news spike, what happened just before that speech. Okay, so this was created by the news, but it's really the market makers use the news, right, to hide their intentions. So if you look at this structure, okay, what do you guys see here? This is a huge W, right? So this news spike creates this huge W. Okay, how many retail traders do you think got faked out by this W and continue to take the buy, right? Because what you're seeing is a continuous uptrend, okay, and they're probably thinking that this is the pullback, right, and then it's going to continue up and go up and up and up, right? So they see this W, they see this big bullish candle, right, caused by the news, and they're thinking, oh man, I'm missing it, I got to get in this trade, I got to get long. And there was also a bunch of pending orders probably right above this quarter point, right, this line here. This is why they chose this exact price level, okay, because there's probably a bunch of pending orders up here, sitting up here that they caught, okay, which before they took those and then they reversed it. Okay, so all these people saw this big bullish candle, they saw this W, they saw this big uptrend, right, and they're thinking, all right, I'm going to buy. The trend's continuing. Lots of buy orders here that were pending and were triggered, and then what did the market makers do? Bam, they took it all away, right? As fast as they gave it to you, they took it all away. All right, so this was the move, drop down into level 2, right? And what are we expecting at level 2? We're still expecting another level of drop, right? So then they gave us a drop to end the week here, and then they gave us a reversal at this peak formation low. Okay, so this was the peak formation low for this week ending. Okay, and then they gave us a reversal off of that into this, consolidated into this area here. Okay, so at this point, what are we expecting to happen? Okay, so I didn't box off this area because right now it's still up in the air, right? We're in a level 2/level 3. It still definitely has potential to go down, okay, because this could just be the first leg of this structure, right? And it could turn down and create the second leg before reversing up, right? So we really have to look at how the price is handled at this zone right here, this structure here, and then also at the previous week's low, right? If you measure from the top of this peak down to the bottom of this peak here, it's about 180 pips or so, right? So our 3 times ADR of 212 hasn't been hit yet. They definitely could take it back down here, down to these levels here, right? Because this is also a major quarter point, and also there's the previous week's peak formation low sitting right here as well. Okay, so there's probably a bunch of pending sell orders here from breakout traders that were sitting down below here, and what they could do is they could bring this price back all the way down here, trap through these two areas, okay, hit those pending sell orders, and then come back up and make that second leg W and come back up from there, right? Or they could just move up from here. If they break this level, okay, they could just continue to move up, okay, but I think it's more likely that they're going to come down and make this second leg, right, and then come down. Or what they could do is they could reset, right? They could continue down and down and down. We don't really know until we see what happens, okay, and and we see what they do with the price. We're really not going to have an idea, okay, but you can still make some good, I guess, educated guesses of what's going to happen, right? So you're in a level 2, level 3 area here, looking for potential shorts, okay? In a level 3, you can trade both ways, right? You can look for shorts kind of up in this range here, and you can look for longs down in this range here, right? So you can trade both directions in a level 3 condition, right? So provided that you are watching the patterns and you're looking for your entry triggers, and as long as your rules are met, you can take trade setups in either direction. Okay, so watch what they do and watch how they handle the price. Okay, we have our 1350, or sorry, the 5200 cross here to know level 2, and when in level 3, you're looking for the EMAs to be properly fanned out, and possibly we're looking for actually the 50 did already cross the 200 here. So all right, so yeah, so you're looking for basically EMAs fanned out. You're looking for a 3 times ADR condition, and you're looking for buys down in this range and maybe possibly sells up in this range. Okay, so that's what we have going into the next week. And also, if you take it, if we take a cue from last week, the last week beginning, next week beginning, we could see a false move down. Okay, they could create that false, because this is a downtrend sentiment right now, right? They could create that false move downwards to begin the week, okay, and then reverse it back up afterwards. All right, so that's all possibilities coming into the next week. All right, so what we're going to do now is we're going to look at some setups, some befores and afters, okay, of what happened on Thursday and Friday. Okay, so Thursday, this was a type 1 short example. Okay, so what I want you guys to get kind of used to doing is putting your charts side by side like this. Okay, so you have your H1 chart and then your M15 chart, so that you can see the bigger picture, what's going on in the higher time frame, and then you're zooming into the lower time frames to take your entries. Okay, so here's where price is right now. Okay, right here is where price is right now, and you can see we're in the cycle. We have our peak formation high, as we denoted before, 1350 cross to our level 1, and you can see our push 1 here. So push 1, then our push 2, right? Pull back, push 2, and we're expecting it to do what from this point? We're looking for another level down, right? So push 1, 2, and it's possibly going to go down here. You don't know where or how much, right? But right now at this point, our bias is a level 2 short, and we're looking to take short opportunities. So what are we expecting coming out of the Asian box? We're expecting a stop hunt high and then a drop. Okay, so out of the Asian box, they create this first leg. Okay, look at these wicks up here, up to the top here. 1, 2, 3, 4 wicks, and then a railroad track immediately after. Okay, so that is a that's a good telltale sign right there. Your railroad track here is a signal and closed below the 13. You didn't have a full TDI confirmation here. You had the cross over the signal line, but you didn't have it below the market baseline. But this railroad track here, because you have a second leg, a nameable candle reversal pattern, this is a strong enough signal to take the trade, take the entry right here. Okay, so let's take a look at what happened. All right, afterwards, what did this trade do? So this is the results. Okay, so like I said, our entry was here on this railroad track formation. If you didn't like this entry, okay, and if you wanted to wait for the confirmation, okay, this next candle that came down did go below the market baseline. Okay, so you could have taken your entry there. You could have waited for the pullback. See how the wick pulled back to the EMA right here. You could have made another entry here in the pullback. Okay, and then if you took it all the way down here, your TP would have been at the dotted 50 figure, and that was good for 30 pips. So if you took like an initial entry here and then another entry here in the pullback, your stop loss is really tight. Okay, 15 pips, just above the high. You could have had two entries on this trade and netted yourself probably around 50-60 pips. Okay, at the end of this trade. So following our analysis and our bias on the H1, we can therefore look for our setups on our M15. We zoom into the M15 and get our setups and our entry and take our trade. Okay, so if you have a direction and a bias, and you're looking for a short, you have more confidence when you're taking these setups and these entries that you're going in the right direction, right? Because you have this to look towards, right? So push 1, push 2, and then now it's push 3 here. Okay, so let's look at another example. So the following day, okay, this is a long entry. You can see here now, back to our H1 chart. This was our push 1, push 2, right? And this came to our push 2, and then down here what we were saying was our push 3, but look how much it came down. It came down a lot, actually. So the following day we have a 50-200 cross into our level 2. We're looking for short opportunities out of the Asian box, right? So we still have another level to go. We're still looking for short opportunities, and do we have a setup short here? But we don't. Okay, so you can see here that it kind of gave us this little M, this ugly looking M thing here, but it's not really a pattern, right? It's not really a setup. Okay, there's nothing here really. So there's no trade short out of the Asian session. Okay, but what it did do is once it came down, even though it came down, it went down nicely, right here is our third push, right? So you have 1, 2, 3 pushes, and then the hesitation and these wicks, right? So here is probably a likely area you're going to see some kind of reversal, and lo and behold, what do we get? We get a W, right? We get the first leg created, this outside structure, railroad track outside structure, which creates the first leg. Okay, it comes back down to the low, so we drew our box when it made the first low of the day leg. It came back down to the box again. It didn't quite come to the box, didn't quite take it out, and then it formed this railroad track candlestick pattern. Okay, so at that point right there, okay, your SL goes right below this low right here at 12 pips. You have your RSI confirmation, RSI above, crosses above the signal line, above the market baseline. Okay, it didn't close above the 13, but like I said, you have a second leg nameable candlestick pattern, like an evening star, like a railroad track, cord of wood, the ones that we talked about in my introduction video, the entry trigger video, sorry. Once you have a nameable reversal pattern, that's a strong enough signal to take that you don't need to wait for the close of the 13. Okay, so you can take that entry here. Okay, you have a tight stop loss, 12 pips, all right, and then we can take a look and see what happened. So this was the result. Okay, you can see that the price just shot up. Okay, we had a nice long shift candle here. Okay, at this point, you're pretty much safe, and if you held up here, 40 pip TP. If you held it here, it was around 50 pips. 55 up here, and you can see that this price never ever came close to closing below the 13 EMA. So it held the 13 EMA beautifully, so you could have held this trade all the way to the top here and gotten 50 pips. Okay, now once again, if you did not like this entry, if it didn't meet the rule, like it didn't close above the 13, right, you didn't have that rule met, but you had the other ones met, you could have waited to take it at this candle. It's okay. I mean, it's a big shift candle, right? You're missing a lot of the move, but that's okay. It's still a safe entry. It's still a valid entry. Okay, RSI above the signal line above the market baseline, closes above the 13, second leg of W. Okay, that's a valid entry. You could have taken an entry there. You could have waited for the pullback to the EMA here and taken an entry there, right? So two more valid entries that could have been taken on this setup. Okay, and if you held up here, from here to here is like 30 pips, and from here to here is like 40 pips, right? So it still would have been a good trade if you had taken that. All right. So, and we can see here in our H1, it tells the same, it tells a congruent story, right? We have a 5200 cross into level 2. We were looking for a short opportunity. It didn't give us a setup, okay? But once it got to this down here, our third push, we were looking for some kind of reversal signal, which they did give us, okay, a W, all right? Reversed up here, okay? And then it consolidated up right around the 200 EMA area on the H1. Okay, so right now this is our peak formation low. I have a question mark there because we don't know if that's really the peak formation low. We have to see what happens next week. But as I said, very likely is, it could just kind of bounce from this EMA, come down and form this second leg W before coming back up again. Okay, so that's how a couple of those EU trades played out. That's going to do it for this video, guys. I just want to do a really quick analysis of the EU. And when I do these things, obviously you guys should be doing your own analysis. I mean, don't take my word as gospel and that's exactly what's going to happen, because I don't know for sure if that's what's going to happen. I just that's what I observe on the charts. And that's how I do my analysis. So that's how you guys can, watch how I did that and kind of form your own analysis from your own charts and markups. Okay, but that's generally how I look at a pair and how I forecast, future trades and setups. Okay, like I said, get used to using, the two charts side by side so you can see, the bigger picture and then the zoomed in, smaller picture for the entries, right? Because what you're doing on the higher time frames is you're just zooming into an area on the higher time frames, like an M15, and then you're taking your entries and looking for a pattern or a setup from there. All right, so hope that was helpful, guys. I hope that was insightful for you guys, maybe eye-opening for some of you guys. I will try to do some more videos in the next couple days. We're still getting the website, everything ready, so I'm really kind of busy with that. I was hoping to get it done by this weekend, but I think it's going to take a couple more days for it to be ready, and I don't want to I don't want to rush anything. I don't want it to be just kind of half-assed. So I want to get that out to you guys as soon as possible. I know a lot of people are excited about it, as am I. But that's the situation as it is. I hope you guys have a great weekend, okay? And I will see you guys in the Telegram channel. Please leave some comments if you guys have any questions on anything I talked about today. And you can reach out to me in the Telegram channel, of course, at JeffXTrader. Okay, guys? Have a great weekend. I'll see you guys on the next video.